Broadcasting live from the IRSMedic studios, it's Parental Advisory. And thanks for joining us on Parental Advisory. Today, Anthony, we're talking about expat tax problems specifically. And what we want to focus on for part one is CSED issues, which we'll explain in full. Part two, we're going to talk about disclosure issues. And then part three, we sort of want to wrap up and get more into the passport issues. But we want to start with CSEDs, and what the heck does that mean?
There's an annoying word. I mean, is everything IRS jargon just annoying? Mm-hmm. Everything is. And, we just becomes, our language that we use around the law office. But I'm thinking to myself, these poor people. These people like, we're not only are we subjecting you to the most onerous tax system in the world, we're also you're going to become inadvertently aware of the horrible language too when you have a tax problem and you're going through and you're learning that a CSEDs, it's like, why can't we make cool acronyms or the backronyms? CSED. I remember the first time I heard that. CSED what? Anyway, CSED stands for Collection Statute Expiration Date.
Mm-hmm. Correct. And I also want to quickly mention expat. People that live inside the country may not know. Is a person who lives outside their native country too simple of a definition?
That's about right. But what's weird is that there's also the other confusing aspect of it, because if you expatriate from the country, that means you give up your citizenship.
Yes.
But most U.S. persons who are expats are still U.S. citizens. There's intentional steps you need to make in order to actually expatriate and renounce your citizenship. So there is some confusion with the language.
We're talking about U.S. citizens living abroad specifically.
Right. Yeah, and by the way, the CSED, I did say collection statute expiration date. I realized I didn't say that's the statute of limitations. That's the word most people know. That's the IRS has a limited amount of time.
Yes.
To collect on a debt. Should I mention just sort of the general rule on that now?
Yeah.
That'd be a good time. Why not? When you're assessed a tax debt by the IRS has 10 years to collect it. Pretty helpful thing to have, right? I mean, only 10 years, things could be bad. So that's pretty nice. The important thing is you have to be assessed. So if you don't file a return, the IRS has forever to assess you. So you kind of have this complete thing. But there's a bunch of things that that is stop the statute of limitations from running.
Yes. And I also want to mention that, so if a liability is due to the IRS, like you said, that's when the date of assessment begins. So simply filing a return where you owe money, the clock will start ticking when you file that?
When it's received by the IRS. It's they'll backdate it. They'll backdate it to the date. Like if you did file your return on October or on October 15th or April 15th, and the IRS didn't receive it, but they could see, yes, it was timely mailed, they'll backdate it. When they finally assess it weeks down the road, they'll backdate it to that date it was timely received.
Okay, so that's when the assessment starts. So let's say you owe $2,000 and you don't pay it, and they don't come after you for 10 years. Once that expires, that's it. They can't.
That's basically it. Now, a lot of people sometimes, a lot of people who are living in the U.S., they get cute. They know this, but the IRS does have something up its sleeve. What they can do is they think you're sort of getting away with it and you're making it difficult for them to collect. They say, all right, smart guy, this is what we're going to do. We're not, we're going to take our all the negotiation programs, all the amnesty programs. We're going to take those off the shelf. What we're going to do is we're going to convert your Title 26. Title 26 is where you find the income tax code, okay? And there's a whole bunch of ways the government can collect without a court judgment, a judgment from the federal court. Well, what they can do, though, is they could take that Title 26 judgment and go to federal court to say, we're suing this taxpayer for these taxes owed.
Oh.
Now what happens is now you have a regular civil judgment that never goes away.
Oh.
Yeah, so sometimes people get a little bit too clever with knowing this to say, well, this is what I'll do. I'll just sort of hide my stuff. I'll do some things, and then I'll get the last laugh on the IRS. And then you find, oh, wow, they sued me, and this isn't a lot of fun because now I have this terrible judgment hanging over my head forever. That goes on your credit report, and you still probably have your tax liens on your credit report too. So you really did a great job of getting a little bit too smart for your own good.
Right. And something else you want to think about is this, we're talking about assessments. So there's no statute of limitations in cases of tax evasion. That they can come after you forever.
Yeah, I mean, effectively there is. It's somewhat true, but effectively they will limit it because they don't need to go all that far back. I think it's really going to depend on what it was.
Mm-hmm.
You know, if they're really, you know, if you look around, you really don't see indictments for things more than 6 years old.
Oh, no kidding.
You really don't. They're trying to get it in under the 6 years.
Unless you're a mobster and they're trying to get something on you.
Yeah, I mean, that's really it. It's like, okay, you know, did you leave them any alternatives? Do they really hate you?
Yep.
And as we discussed yesterday, you can be indicted for not filing a tax return, but basically you have to be doing something they kind of hate you before anyway for them to do that. They're just not going to go after the regular person.
Yep.
So the same thing.
Yep. So filing but not paying is just a civil offense, not criminal. Mm-hmm. All right. So like you said,
filing but not paying, and as long as you're willfully not paying.
Okay.
If you're intentionally frustrating the collection of a tax, that is actually a crime. Now, again, not a lot of people are indicted for that. It's really a case of, okay, we really don't want to charge this guy with tax evasion, because that could be a harder case to prove. Mm-hmm. You have to go into somebody's mind and prove to the jury that they knew and all this or that. But when you're like, well, you knew you had the tax debt, and we could see based on your actions that you took these steps to hide your assets to make it difficult to collect, it's an easier case to prove.
Right.
So that might be a way to do. And the same thing with the failure to file returns. Well, you knew you filed tax returns in the past, so we know you know how to file returns, and now you've stopped filing them for some reason, and we can't figure out why. And it looks like you're trying to, you're just, willfully not filing. Mm-hmm. And so that's sort of how they go.
Got it. Now, you had mentioned various circumstances that can extend the CSED. So we're talking about 10 years from the point of the liability. We'll save the biggest that affects expats for last.
Yeah.
But some other examples are bankruptcy, termination of installation agreement, if you have a pending offer and compromise, innocent spouse release. These are all things that we've talked about. Military-related service in a combat zone, that's going to stop it. Each situation is different in the amount of time that it's going to extend that CSED. And they're really confusing.
Oh, it is incredibly confusing. Now, because it's true, I was about to correct you, but then I realized you were correct.
Again,
because I was like, no, Claudine, it really doesn't extend the CSED as much as it does toll it. Well, actually, it does both, because there's certain things in here that it will toll the statute, stop it from running while the thing is going on. But then, even after that thing is going on and stopped, some of these will actually tack on time. So It can get really confusing to know where it is. And when you're trying to calculate the CSED, and we're doing this for clients, like, okay, we're close. We're like, you got 2 years left. Are you sure? And then we're like, yes, we calculated 2 years left. Just pay the IRS this amount. They're going to leave you alone. You'll get out A-OK. 2 thumbs up on that.
Yep.
So that's something, and it's very difficult. And, and by the way, as you get near the end of the CSED, the IRS knows it too. Mm-hmm. So they might get a little bit more aggressive. And then sometimes somebody might have to cover up their mistakes they did by letting you slip by nearly. And so they might sort of bend the rules.
Ooh,
that happens.
I've seen that.
So, yeah, right.
So I'll give you an example from the irs.gov website. So, for instance, bankruptcy. This is what they say. The CSED in a case under the bankruptcy code is suspended while the service is prohibited by reason of the case from collecting and for 6 months thereafter.
Yeah.
So thus, the CSED is generally suspended while the automatic stay imposed by the bankruptcy is in effect. I mean, and it just goes on. And if you look at the offer and compromise, holy crud.
Oh, right.
There's like 7 or 8 different things. If you do this, but not this, and this,
right.
It'll be an extra 6 months plus the time of blah blah blah.
Yeah, and so the the rule that you sort of know is like, if the IRS can't collect from you because of something, CSED is told. And then in your example that you said the bankruptcy, you're told, and now we're adding 6 months to it too. So that's something to think about. When you say, okay, when's this really going to go away? Now, bankruptcy may get rid of your tax problem if you do it right. But who knows? Not all your taxes, and not every certain type of tax. And the offer and compromise, I would just say, I've seen cases because of people filing stupid offer and compromise after stupid offer and compromise, because they kind of know the game. Like, oh yeah, the IRS can't collect from me. I'll just file another bullshit one. And so they file 7 offers and compromise. And there it is. They have a tax debt from 1990 that's still hanging around. It's like, well, way to go, genius. You know, if you weren't so smart, you'd be out of your problem, but you're so smart and you know how to out IRS the IRS. Now you have this hanging around your head. Way to go. And by the way, when you actually, if you actually have a decent offer in compromise, the IRS is going to look at you like, yeah, this is just one of those guys who's, you know, just a clown. We're not going to take him serious. So again, you're not as smart as you think you are when it comes down to that.
What I think can be frustrating, though, for the average Joe, if they're trying to actually work, you know, with the IRS, I found that the IRS has, they've been known to make mistakes, Anthony,
no way.
when calculating the CSEDs.
That's impossible.
That's impossible. The CSEDs are so complicated that in 2013, our friend, the Treasury Inspector General for Tax Administration, did an audit. They found that 21% of CSED calculations were not accurate. That's about 10,000 calculations. So they potentially screwed up 10,000 people's CSEDs.
Yeah, and usually it's not going to be in favor of the taxpayer when you see it. It's usually not. So that's always something to be aware of, too. The IRS could have lost their ability to collect.
Right. Now, the biggest issue when leaving the country, U.S. citizen, living in another country, is the CSED, you brought this up, it's tolled. It stops running while you're away.
Yeah. Yeah, and we were curious, because we haven't run into too many cases where a taxpayer left the country and the IRS actually coded the case correctly so that the statute would be told. Well, we recently had someone we have a new client with all the passport stuff coming in to say, yeah, I kind of had a tax bill from years ago, and so we looked into it, and sure enough, it's still out there, and it's a very, very old tax bill. So that the IRS, I don't know if they're coding all the cases and if they actually know you're there, but if there certainly can be, they can have ways of finding out. And by the way, let's assume that, now when we said before, I was like, oh man, I don't know if I should say agree with you on this, but you said, hey, once that's it, the IRS can't collect. Well, there's a little twist.
It's a depends.
It's a depends. I should have always answered, it depends. So let's say that you're overseas and the IRS mistakenly coded your case and didn't say put you as overseas. And so they actually had your statute of limitations running and say, yep, this debt went away by not being able to collect on it. The IRS can go back in time and say, yeah, we're going to recode that case. It's still alive.
Oh.
They can revive the thing that's dead. And yeah, there's dead and almost dead. So that's
I'm not dead yet.
Yes. So that is they can come back and do that. It's a real nasty surprise. You think, oh yeah, I waited them out. Yay.
Not necessarily, because they are working with Customs and Homeland Security to get information to know who's overseas. And so potentially you're saying now the assessment lasts forever if you're overseas, or until you come back. If you come back, does it start at 10 years?
Yeah, then
start to zero.
It starts wherever it left off.
Okay.
And I don't know if they tack on additional time for the re-establishment. One of the reasons why they add on that time is because they're saying, well, look, if we can't collect on you, then the statute doesn't run. So it takes their system's time to figure out, oh, you're back, we can start collecting. But they can't start collecting because there's certain notices they have to send, refresher notices along the way.
Oh,
so just because you came back that day, because, I guess somebody could be pretty smart. They could come back, and sort of chip away at the statute that way.
Oh, wow.
But because it takes the IRS about 8 months to kind of figure out where I am, send me all the right notices before they could levy. So I'll just be here for 8 months, say, you got to give me credit for that. Like, no, they're not going to do that.
Yeah,
they figured that out.
They're not the warm fuzzy IRS.
No, they're not going to just say, oh wow,
good job.
And I mean, that's the thing, where the IRS sort of a lot of stuff can slip under their radar if you just sort of have the right demeanor. If you just have the right demeanor, hey, just want to get in compliance, I'm a good taxpayer, just want to get in compliance. I realize, just want to straighten out my life, want to do that. That right there, that's like a magical word with them. You have just said the right things to them, and avenues open up to you. When they start saying, oh, really, smart guys, when you're like, hey, you know what? You're a stupid IRS employee. You know what? I think you should shut up. When you start, you are so stupid on the law. You don't know what you're doing. When you start, and people do
My
this.
body is real estate.
My body Yeah, when you start coming up with arguments and you're trying to, push, some IRS employee around, that's where you can start to say, they're like, oh, okay, smart guy. Well, let me just take a look at your case to see what I can come up with. Because a lot of stuff, they were just like, oh, there's not enough time to look at it. And if you don't give them a reason to be mad at you, they're not going to go out of their way to hit you with something. But if you do, they're like, oh, okay. Well, we have a lot of things up our sleeves. Yeah, we're not as weak as you thought we were. I don't know why anyone would think the IRS is weak. No. I mean, come on. No. You just have to just do that. I just want to be a good taxpayer and be in compliance. I realize, I just want to do the right thing. This is what it's about.
Yep.
Just say it like
even
practice.
If you don't agree
right.
You agree with it.
Right. Oh, I don't care
matter.
I don't care what you think inside your head. Just practice that in the mirror.
Honey, your butt doesn't look big in those pants.
No, absolutely.
It looks great.
It's a great idea. I think we should go there. Yeah, I really am looking forward to going to Manhattan for the holidays.
Dinner, pizza.
Yeah.
Pizza sounds great.
Yeah, pizza.
And so for expats, I think the advice is, the sooner you come clean, the better, because interest and penalties is going to quickly add up. And we're going to, in the next episode 2 of this podcast, we're going to talk about how quickly those penalties can get over $50,000.
Yeah.
And then we'll
small debts can get out of control really, really quickly.
Yep. So we'll talk about the fact that it can quickly grow. And then in part 3, we're going to talk more about if it does get over $50,000, how it's going to affect your passport. So make sure you stay tuned for episodes 2 and 3 coming soon. Thanks for listening to Parental Advisory. Thanks for joining Parental Advisory, hosted by Anthony Parent, produced by Claudine Gindel, that's me, engineered by Chris Chen. For more podcasts, visit our website at parentaladvisoryshow.com and like us on Facebook to submit story ideas. We'd like to thank our sponsors, IRSMedic.com, the law offices of Parent, and Wynn, LLP, real tax attorneys for tough tax problems.